What is the foreign earned income exclusion? U.S. citizens and resident aliens that are living abroad may qualify for certain exclusions and/or deductions in relation to their foreign earned income and foreign housing as provided by the Internal Revenue Service. Yet to qualify for the foreign earned income exclusion and foreign housing exclusion, or the foreign housing deduction, the subject taxpayer must meet the criteria that has been established by the IRS. With the basic premise that U.S. citizens and resident aliens that live abroad remain subject to taxation on their worldwide income, it is possible for those taxpayers to qualify to exclude from income up to $120,000 of their foreign earnings, in addition to excluding or deducting certain foreign housing amounts. To claim the foreign earned income exclusion, the taxpayer must meet all three of the following requirements. 1. Their tax home must be in a foreign country. 2. They must have foreign earned income. And 3. They must be one of the following. A U.S. citizen who is a bona fide resident of a foreign country or countries for an uninterrupted period that includes an entire tax year. B. A U.S. resident alien who is a citizen or national of a country with which the United States has an income tax treaty in effect and who is a bona fide resident of a foreign country or countries for an uninterrupted period that includes an entire tax year. Or C. A U.S. citizen or a resident alien who is physically present in a foreign country or countries for at least 330 full days during any period of 12 consecutive months. Having satisfied these base criteria, it is also necessary that the subject of the exemption also meets the requisite Internal Revenue Service criteria. With respect to foreign earned income, this is generally income that the taxpayer receives for services performed during a period in which the taxpayer meets both of the following requirements. Their tax home is in a foreign country, and they meet either the bona fide residence test or the physical presence test. Furthermore, foreign earned income entails 1. Pay for personal services performed such as wages, salaries, commissions, bonuses, professional fees, and tips, and may also include, in full, in part, or not at all, business profits, royalties, rents, scholarships, and fellowships, while excluding dividends, interest, capital gains, gambling winnings, alimony, Social Security benefits, pensions, and annuities. 2. Non-cash income, being the fair market value of property or facilities provided to the taxpayer by their employer in the form of lodging, meals, or use of an automobile. 3. Allowances and reimbursements received by the taxpayer, such as cost of living allowances, overseas differential, family allowance, reimbursement for education or education allowance, home leave allowance, quarters allowance, and reimbursement for moving or moving allowance. The foreign earned income exclusion is established for each tax year by the IRS, with the exclusion amount for the 2023 tax year having been set at an exclusion of $120,000 of the taxpayer's foreign earned income for the year. A taxpayer, however, cannot exclude more than the smaller of 1, the exclusion amount, i.e. $120,000 for 2023, or 2, the taxpayer's foreign earned income for the tax year minus their foreign housing exclusion. If a taxpayer chooses to exclude a foreign housing amount, the taxpayer must determine the foreign housing exclusion before they determine the foreign earned income exclusion. That is because the foreign earned income exclusion is limited to taxpayers' foreign earned income minus their foreign housing exclusion. Furthermore, if a taxpayer chooses to exclude foreign earned income, that taxpayer cannot deduct, exclude, or claim a credit for any item that can be allocated to or charged against the excluded amounts. This includes any expenses, losses, and other normal deductible items allocable to the excluded income. Meanwhile, if both the taxpayer and their spouse work abroad, and each of them meets either the bona fide residence test or the physical presence test, then both might claim the foreign earned income exclusion, such that a taxpayer and their spouse could exclude as much as $240,000 for the 2023 tax year. This represents merely an initial inquiry into foreign earned income exclusions, as has been presented by the Internal Revenue Service, with further specifics being set out in IRS Publication 54, Tax Guide for U.S. Citizens and Resident Aliens Abroad. More information is also available through the IRS's own website, together with consulting and engaging with knowledgeable tax professionals who are apprised as to all the specifics of your foreign income, such that they might appropriately advise yourself as to your income tax situation when you live outside of the United States of America. Thank you.